Hey guys, thank you for stopping by. Don't forget to subscribe, like, and share. And I hope you enjoyed this interview. Now, let's delve a bit further into this topic. And my guest is joining me now. She's Nabila Mohammed, banking analyst at Chapel Hill, Denham. Hello, Nabila, and welcome to the program.
Hello, Nancy. Good morning, and thank you for having me.
Good morning. Now, let me get started first. Was this move expected? Did you see this? Did you see this approval from the central bank? Did you see it coming?
So really, since last year, we've been hearing that there's something going on between Providus and Unity Bank, but there was no official statement, there was no formal release by either of these companies or even the regulator in regards to what the process was or at what stage it was. So it was just a rumor last year. And as they say, there's no smoke without fire. So now everything is out in the open. We have seen that with the circular that was released yesterday, they approved it and also provided funding that the merger is contingent upon. So really now everything is out in the open. So based on that rumor last year, everything is now confirmed with yesterday's news.
Now, that yesterday's news, were you expecting like a merger or an acquisition? Because months back, we saw that, Providus Bank tried to acquire a major stake in Unity Bank, but from the, communication yesterday from the Central Bank of Nigeria, we saw that it is, a merger.
So I would say that we were not surprised. It just boils down to the two entities that are involved, whatever they have decided to agree on, if it is going to be a major stake acquisition or a merger. But as it is clearly stated now, it is a merger between Providus and Unity Bank PLC.
Now, from the CBN's memo, which we're saying, okay, from the CBN's communication, and I'd like my team to put that, release again from the central bank on the screen, because the central bank did talk about financial accommodation. I would like you to explain what that means. Even though we are hearing from sources, we don't know how confirmed that is about injection of money into this. So speak to my viewers about that, perhaps what that financial accommodation would mean.
So I would like to think about it this way. Financial accommodation is really just financial support. And this support from one party to another party. And this support may not necessarily be in form of money. It can be in terms of infrastructure. It can be in terms of any other thing that would make the business of the other party, that's the receiving party, become easy, and to make it easy for them to carry on their business. But in this instance that was used yesterday, that financial accommodation that was advanced by the CBN to Unity Bank, it is going to be in form of a term loan. So it's going to be a financial form of support, a financial form of assistance. So broadly speaking, the accommodation can be from it can be either money or something in terms of infrastructure or any other thing necessary that the receiving party needs or requires to really carry on their business with ease and smoothly.
Was this also surprising? And let me situate it this way, because I can imagine the Providus customers, a bank that was founded in 2016, if I'm not mistaken, as against
Very
Unity
true.
Bank PLC, the bank listed on the exchange that was founded in 2006. For a younger bank to merge with it, whether it's major stake or whatever, but at least the two banks are coming together now. What does this signal? Because this is the first merger since the announcement in March of this year by the CBN, since recapitalization plans announcement by the Apex Bank. So what does this signal, especially to their customers? Really, that's one. Then number two is about confidence, because this also brings back just a few years ago, either 2-3 years ago, the story around Titan Bank and Union Bank. You understand what I mean in terms of, you remember Titan Trust Bank here, that's the name, Titan Trust Bank, a younger bank with Union Bank. So talk to me about what you think.
So really what I think is this. We have Providus Bank, that is a regional bank currently, has a regional banking license. With this merger with the national bank, it just speaks one thing to me, that in the minds of Providus, they intend to expand their business. They intend to grow their business. And while all the other banks are likely going to retain their identity, retain their license, because we have a couple of them that are currently in the market raising capital to meet the new capital requirements. We also have the likes that would need to merge in order to survive. If we're looking at Unity Bank, despite it being an old generational bank as far back as 2006 when it started operating after the whole consolidation with 8 other banks, we see that it has struggled a bit in terms of profitability. Over the years, there are years that the profits have dwindled, and we noticed that from 2017, the bank started to struggle with negative equity position. So it is not surprising that we are seeing that there is going to be a financial support coming from the regulator to support this merger that is going to happen between Providus and Unity Bank. Now, just to give you a bit of color, in terms of just looking at Providus that started in 2016, we know that currently, as at FY 2023, their total assets are around 1.6 trillion naira. Now, if we juxtapose that with the total assets of Unity Bank, at least with on their most recent result, which is their 9 months 2023 results, we see that at circa 450 billion, the 1.6 trillion in terms of total assets of Providus is more than 3 times the total assets of Unity Bank. So really, it is not about how old or how far, it's how well that these businesses have thrived in this environment. So for the customers of Providus Bank, they should look at it really that their bank is trying to expand in terms of expanding their license or possibly upgrading their license to go national from regional. And this will also support the Unity Bank customers as well and provide some form of respite, given that there is a financial backing that is coming from the regulator, which is the CBN.
Apart from the monetary aspect, if we take a look at the core things that these banks do, I know that Unity Bank is likely one of its core, if not the major one, is about agricultural financing. Of course, you've talked about is a national bank. I think perhaps it could be the 10th largest bank by branches, if I'm not mistaken. And Providus Bank, the strength in private banking, digital infrastructure, and what have you. Unity Bank has also mentioned, even over the years, that the poor operating environment has, hampered its operations. So how do you see these two banks merging? One, strength in agricultural financing, the other one, IT, infrastructure, private banking, corporate banking also.
So really, as with any two parties coming together to become one would expect that they both lay down their strengths and weaknesses on the table. So if Unity Bank is strong in a particular sector in terms of outreach, in terms of lending, in terms of focus area for deposit liabilities growth, then and that marries well because it's another thing to okay, this is what I have, and another thing to check the compatibility of these two. So we really need to spread out those things on the table, and each one picks from each other's strengths and leverage on that going forward, because that will really be the onus on which the merged entity or the combined entity will thrive once that is clearly stated and gotten out of the way. That is, if their strength is really in the retail aspect in terms of deposit growth, that's from Unity Bank, then that can be adopted by Providus, given that it plans to become a national bank with this merger that is happening. Now, it is not exactly stated clearly that the Providus Bank would want that national license because we shall get down into the core capital requirements with those two banks. But what really we should focus on is these two entities that are merging. What are their strengths? What are their weaknesses? Where can this one complement the other? Once that is clearly identified by these two entities, I'm sure they will be able to leverage on all their strengths and take care of, look at the potential weaknesses that these two might have and come up with a way to overcome it going forward.
Let's take a look at what's next, because if there is going to be now, of course, a merger, what is next? Will we see a change of name? Will one be adopted into the other? What will be next in terms of listing? Of course, one is listed, the other one is not listing. What's next even for SEC, which is the regulator for capital markets?
So, as I earlier mentioned, there's other things that we would have to consider. Given that, as you rightly said, Providus is a regional bank. Unity, on the other hand, is a national bank. We'd also have to look at the ongoing recapitalization exercise and see which one applies to them, both of them, or the merged entity. Now, if you look at it in this first way, which is the fact that if they intend that the merged entity or the combined entity will remain as a regional bank. And we are looking at the core capital, that's the share capital and share premium, that's currently what qualifies for the recapitalization requirement as set by the CBN. If we are looking at just Providus alone, they are around 41 billion in terms of core capital, that's share premium and share capital as at FY23. Now, given that Unity, on the other hand, is in a negative shareholders fund, in my view, it looks like that money has the core capital has already been swallowed up by that negative position. So it will just be that the merged entity has 41 billion currently and will need 9 billion to meet a regional license, which is a low-hanging fruit. Now, if that is not the case, it would also mean that they want to they want the merged entity to have a national license. And if they want the merged entity to have a national license and still boiling down to the current capital level of at least one of the parties, which is Providus in this case, we will see that they will require around 159 billion to meet the national requirement, which is 200 billion. So all these issues will have to be addressed next, given that they have gotten the approval from the regulator to carry on with the merger, with the merger transaction. Now, the next thing, of course, much later, we'll start to really see clarity around whether they intend to even list, given that one of the parties involved in the transaction is a listed entity, and I'm speaking to Unity Bank in this case. So all these things will definitely unfold as the transaction, takes next steps, and we start to see them really take strides in terms of how they intend to do. We might see some name changes. I won't be surprised. We've had, or we might see some, one other adopting the logo or something like that. So it is open really, and it's going to boil down to what these two parties agreed at the end of the day.
Since this is a first merger, are there indications that we might see other likely mergers?
Most definitely, it is not. We're just starting the whole recapitalization exercise, and there are still a number of banks, regional, that have not really disclosed their plans. There are still even the ones that are listed banks. Not all of them have disclosed their plans for capital raise, but at least for the listed banks, we would expect that by this year, before the end of the year, there will be clear cut headway around how all of them intend to go about the capital raise. So we will not be surprised definitely to see that there are still some mergers down the line, maybe next year.
What will you tell the customers of both banks? Now, then, what do you think will be the larger impact on the economy moving forward? Of course, this recapitalization process, the Apex Bank has said, is giving banks 2 years from this year till 2026, March 2026. What do you think will be the impact of this on the economy moving forward, and perhaps even the market? Because now you're seeing even the banks do have rights issues and public offers on ground. Many of them, Fidelity, Access, who else again, I have many of them selling shares to existing shareholders and trying to cut new shareholders. So what will be the larger impact on the economy as well as the market? Not forgetting the earlier question I asked the customers of both banks. Because some may actually also be apprehensive now, and that also brings to the question of confidence in the banking sector, even though that the Apex Bank had said during the Heritage Bank days that what happened, Heritage, that no bank faces a situation like that of Heritage Bank.
So let me start from the customers. I believe that with the circular that was released yesterday and the fact that there's going to be a financial backing to support the merger transaction between these two parties, I feel the customers should really just relax and see what happens based on this particular thing that has been released and how this transaction plays out. Because one thing we should always have at the back of our minds is that the regulator has the interest of the depositors at hand, and that is why they are taking whatever step possible to make sure that they retain or retain the or sustain the calm in the entire banking system. Now, where they know that there would really be a need for them to intervene and like in the case of heritage and something like that happens again, they will definitely come out to say so. And based on the fact that they are coming out to support with a 700 billion naira facility as financial accommodation towards the merger and the merger transaction, it just shows that they really have the support, they really have the interests at least of the depositors at hand in the back of their minds with this particular step that they have taken with regards to this issue. Now, with the entire capital raise that is ongoing in the markets right now, currently we have 5 banks that are out in the market to raise capital. We have FCMB, Fidelity, we have GTCO, Zenith, as well as Access. So all these banks are in capital and they are out to raise about 1.4 trillion, just looking at the total amounts that they are in the market to raise. What's the impact on the market? Of course, it will definitely spur some activities, but we should. I also have in mind that because of certain policy, some investors might be a bit worried about how successful this capital raise will be. But in my view, I feel that at the end of the day, it will be a successful exercise. And the reason I say this is because these banks are poised to become stronger at the end of the day. And the entire recapitalization exercise just started as a result of this move or step or direction towards a $1 trillion economy. So with that in line and with that at the back of the minds of everybody, we see that the market participants, which includes PFAs, other institutional investors, retail investors as well, and foreign investors, because we have foreign investors that are invested in these banks, as well as they see the long-term value of these banks, they will definitely be willing to make sure that the exercise is concluded and is stronger. Now, the impact it will have on the economy, it is one thing to raise money, which is what the banks are doing, and it's another thing to create value with that money. So we would expect that as the whole challenges, macroeconomic challenges and headwinds ease a bit, they will be willing to extend lending facilities aggressively in order to grow the economy and reach the target $1 trillion economy at the end of this capital raising exercise, which will last up until 2026. So at the end of the day, if you look at it all round, we have a regulator that is trying its best to make sure that sanity remains in the system and there is no frenzy wherever. And we also have the fact that these banks are very strong fundamentally, especially the ones that are currently in the market and are trying to raise funds via public offer or rights issue. And at the end of the day, it will translate or boil down to them extending facilities in a very friendly and macro relaxed environment where they will be able to grow the economy and help the government achieve their goal of $1 trillion economy eventually.
All right. Thank you very much, Nabila, for joining us this morning. Let's continue to see what happens. Of course, we will be monitoring what's happening in the banking space. Nabila Mohammed, banking analyst at Chapel Hill, Denham. Thank you. Thank you for watching. In case this is your first time watching us, thank you. Don't forget to subscribe to our YouTube channel, drop your comments as well as like, and most of all, share our content.